Bank, HDFC Bank, they too have skimmed off a little bit from the top, definitely. Let's also welcome on board Sudip Bandyopadhyay then and find out what he's making of the market right now. Sudip, hi, afternoon. A painful day, but at least today we can say and blame it on the globe because it was a bad handover from US equity markets. Asia as well leapt it up and seems like we're also sort of getting swept in that storm.
Oh, absolutely right. I think the global market was weak, and I think that has continued and definitely influenced India. Of course, we have our own set of challenges, and FIIs have been relentlessly selling, and that selling, it's just not abating in any manner. Let's hope that the GDP data, which comes, definitely is better than what the market is expecting. I think that's one ray of hope which I'm holding on to. And if that does happen, I think there will be once again, probably a little bit of positive data point as far as India is concerned. Beyond that, I don't see any major data point. The tariff related all these announcements is creating havoc with investor sentiments and FII sentiments, and that is having significant impact on India.
Well, certainly, all eyes on that. But amidst this, we also have a very interesting news flow coming in from Nitin Kamath as well. He's the founder of Zerodha. And what he's saying that the markets are finally correcting, and he has no idea that for how long this correction can persist. But he is definitely giving some sense that what's been happening in the broking industry, where the volumes as well as the number of trades are definitely shrinking. And there's been a sharp sell-off over there. It's been a 30% drop in the activity across brokers, and that is definitely weighing heavy on the broking industry. The other key concern he is highlighting is that the government will not make even 40,000 crores in terms of STT in FY25 and 26. That was the target set, and that will be at least 50% below that 80,000 estimate is what he's highlighting. So definitely challenging times for the broking industry. But Sudip, I wanted to have your take on this one, because a lot of these stocks are within the listed space we're having and seeing that traction. They have off late come off their highest point, of course. But do you believe it is time to yet again revisit some of those stocks in the portfolio, given the challenging time in the broking industry?
Definitely. I think, fundamentally, financialization of savings is definitely happening in India. And that does give a long runway for all these companies. Yes, this temporary setback because the market correction has been sharp and brutal, and it has been continuing for the last 4 5 months. Probably it will continue for some more time. And of course, when this kind of correction happens, volume shrinks, and that's what pretty much is happening. But overall, financial market participants, financial market companies, and financial market infrastructure companies do look good from a long-term perspective. If I have to pick up some stocks in this space, taking the opportunity of this correction, probably I'll look at, K Fintech and CAMPS. I think they have a bit of a more resilience compared to the pure play broking companies. Their fees don't get directly so much impacted as a broking company's revenue gets impacted when volume shrinks and market starts correcting. Also, these companies have opened up the Southeast Asian market where the rates are much better, and long term looks definitely very good. I won't mind looking at some of the exchange companies also, particularly MCX. I think BSE is good, but the valuation still is full. So MCX can be definitely looked at current levels.
Look at exchanges right now, then looking at brokers. That's where the safe haven perhaps could be. While BSE, of course, is cracking really hard today, but MCX is what Sudeep believes is going to be a good buy. But Shimangi, I want to come to you with two stocks. Bharti as well as M&M. M&M, of course, has seen about an 80% fall, I think, from its 52-week highs, that of 3270 thereabouts. But Bharti, given the correction in Bharti, I think has just about started.
Absolutely. There has been, resilient stocks which have been witnessing, weakness, and this is, quite bruised as of now because Bharti Airtel in its space used to be one of the strongest counter, and M&M also used to hold that flag. But of course, we've seen that weakness has come into these stocks as well. Now, talking about Bharti, it's clearly an accident today. We've seen that more than almost 5% of all today. This stock has broken its crucial support zones as well. So even though it is still holding on to the lower band on the weekly basis, but I believe this this level is all set to be broken with the amount of selling pressure that have been intensified today. So overall weakness could continue here till round about 1500 levels with a resistance at 1600 zones.
That's the take coming in on M&M as well as Bharti Airtel. Let's watch out for those. But moving on, and Adani Green Energy has achieved a remarkable milestone, surpassing 12,000 megawatts of operational capacity, a first in India's renewable energy sector. This accomplishment underscores the company's commitment to delivering 50,000 megawatts of sustainable energy by 2030. The company's operational portfolio now stands at over 12,000 megawatts with a mix of solar, wind and wind-solar hybrid capacities, and this capacity can power approximately 6.2 million homes and prevent the emission of 22.64 million tons of CO2 annually. Adani Green Energy is also developing the world's largest renewable energy plant in Kavra, Gujarat, which will have a capacity of 30,000 megawatts. So that's the take we are getting and the latest updates from Adani Green Energy. But other than that, today all eyes will be on the auto stocks as well, and coming Monday as well, because February auto sales data will be through, and just ahead of that we are seeing the weakness trickling in on the auto counters along with the markets. Why so? Because you should not have much expectations from the Feb sales. It's expected to be a bit of a mixed bag, but it's just be a minor jump what we are expecting for the passenger vehicle as well as the tractor segment. When it comes to the passenger vehicle segment, M&M of course is expected to do well given the kind of strong order book and the pending order book rather what the company has. So on that counter we are expecting a 13% jump, but apart from that it could just be a single digit growth for rest of the players. Within the commercial vehicle segment, let's watch out for Eicher Motors VECV. A 13% uptake is what we are expecting, but other than that some of these other counters, Ashok Leyland as well as Tata Motors VECV, can see some bit of a decline on a yearly number. Within the two-wheeler pack, let's watch out for Eicher Motors Royal Enfield, because January month was quite strong for the company. This time though we are expecting a bit of a moderation, but 85,000 units is what we are expecting. From TVS, Hero MotoCorp, Bajaj Auto, don't expect much of a fireworks there. But lastly, from the tractor division, what the internals are highlighting is that the farmer sentiment is really strong on ground and the tractor sales can actually do very well. Escorts, we are expecting a 4% jump, while for M&M tractors a 12% uptick is what we are factoring in. But Rudra, I specifically wanted to have your take on Escorts, because given the fact the commentary regarding the farm sentiment as well as the agri sales panning out, that has been really strong, but the stocks definitely not participating. But Escorts at close to 2,800 levels, how do you see this counter?
Definitely making a lower top and lower bottom formation, and if you see on the chart the trend is clearly on the downside. So for me, Escort, at least it has to make a move above 3,000 so that let it catch some amount of momentum and then you can buy. Or else on the lower side, if you want to pick the bottom, next support emerges closer to around 2,500 zone. So at current price I will definitely avoid, wait for lower levels to buy. Or if you want to pick on the momentum, at least let it cross 3,000. So at this range of 2,500 to 3,000, I will give a pass to Escort and wait for these levels to come.
Whether or not we get a number above that 6% mark is what the street is working with. But other than that, back to the markets, what we see in terms of the index, so the Nifty Energy is another sector which has actually declined for the 5th consecutive month and is now seen to be hitting a 14th month low for itself. But within the energy and especially the power basket, Sudip, what we are getting to hear from the reports and the ground reports suggesting that the demand on ground is seen to be once again inching up. Help us understand your take on the energy and the power basket.
positive on the entire power segment for quite some time, and we maintain our positive bias. I think there has been a structural change. The demand is very, very strong, and this demand is going to persist in the long term. Every nook and corner of India has been electrified. The electrical gadgets usage is increasing. In every sphere of our life, the demand for electricity is increasing. So obviously, the demand for electric supply is huge. So the entire ecosystem, whether it's generating companies, distribution companies, finance companies, ancillaries, all of them are getting orders and opportunities of performing and outperforming. If I have to pick stocks, considering all the corrections which have happened, I will probably still go back to the industry leader in the generation, which is NTPC. I think it does look good, considering the strong demand, excellent backward forward linkages, and execution capabilities, and the way they have kind of presented themselves. The correction is an opportunity for long-term portfolio building. Other than that, one can look at the power financials as well, because the demand for the setting up new power plants and catering to this demand cannot be met by banks. It has to be the specialized finance companies, which is the PFCs and RECs and IREDAs of the world. I think all three have a great opportunity. Taking the opportunity of this correction, which is very sharp and brutal, let's say in case of IREDA, I think it's a good stock to buy for long term.
Given that IREDA is also going to be added in the FNO series now, it was a non-FNO stock, remember. But good chatting with you, Sudip. Thanks for your time as always.
If you like this video, then like, share and subscribe to ET Now.